Welcome back to hashtag Let's Chat. I am Nathan Montgomery, your host on the podcast, and I am a realtor on the Space Coast of Florida with RLL Real Estate Group. I am so excited about our guest today. His name is Jason McCloy. He is a loan officer with CrossCountry Mortgage, also located here on the Space Coast of Florida. Jason has been in the business for 23 years and has been a top producer since becoming a loan officer in 2008. Today, we're going to discuss all things first-time home buyer. So let's just jump on in with Jason McCloy. Hey, Jason.
Hey, good afternoon.
So good to have you back on. It's been a few years.
It has. The last time I think we were touring Cocoa Beach.
Yeah, we were. Yeah, definitely. So we're going to talk about first-time home buyers today, as we said in the intro, and that's a whole big topic all by itself.
Yes, it is.
And so we're going to try to cover as much as we can on this, but we'll see how far we can get. We may have a part 2 or something. But so let's just start with, when should someone first reach out to a lender when they're thinking about buying a house?
Great question. Great first question. And it's one that it sounds so cliche, but it's so true, is right away.
Yeah.
Right away. When you're thinking about buying a house, when you're thinking of, I better go call a realtor to start looking at homes, you should have already contacted a lender. I mean, honestly, the lender should be the call even before the real estate agent many times, because you really want to make sure that your financials are in shape and that you're good to go. But there's also so many things people think that's too big of a step. They're kind of scared or intimidated by that step.
Sure.
Don't be. That step is so critical, because that's going to let us see behind the curtain and kind of help guide that buyer into, hey, we need to work on this, or maybe we should do that. And that massaging that you work together as a team, you want to get it as early as possible.
Yeah. And like I've told people before, hey, even if you're a year out or whatever, like, go ahead and make that call, because they can help you make decisions that will get you ready for that 6 months down the road or year down the road or whatever. So I think, even that early, it's a helpful thing, like you said, more than the real estate agent, because we're after that process. After that step in the process is when we step in and start doing our part. So a lot of times people will say, well, I've been pre-approved or I've been pre-qualified or whatever. They come to us. So what is the difference between these two things?
All right, another great question. So you'll hear, and they're leveled up. So there's a pre-qualification, a pre-approval, and then a full loan commitment. Mm-hmm. So we operate within a pre-approval here at my company. We don't even bother with a pre-qualification necessarily.
Sure.
Pre-qualification can be written on a bar napkin. I mean, that could be that could be very high level. You tell somebody your credit, you tell them your income and assets, and they write you a pre-approval or a pre-qualification letter.
Right.
That's just not doing anybody any good service. I don't think that you're serving the customer well. You're certainly not serving the real estate agent or the seller, for that matter. I mean, if you go present that offer, then you've got a seller who's excited about selling their home that may not be able to do so. The pre-approval, like I said, is where we live, and that is where we actually pull credit. We look at some income docs. We look at some asset docs. And when I say look at, it's literally just sending me a pay stub and a bank statement and letting me just kind of glance at the stuff to know that when I put my name on that letter, when it goes out to your real estate agent or the real estate agent, that it means something. So that's powerful. Yeah. And then the last one, the commitment, the full loan commitment, that's really, we do that. And we do that free of charge at my company, where we'll take your documents and go ahead and send the loan file in without a property identified. So you don't even have, it's TBD, you don't have a property yet, but we want to make sure that everything is in order. So we're looking at, you may have a more complex situation where you're self-employed or you have assets that are diversified or something. We want to be able to go in and get that full approval. Now, once you get that, then you're golden. That would go find a house and you're good to go.
You're ready to take that step and go.
But most people do operate within that pre-approval, pre-qualification. I tell people just to kind of steer away from the pre-qualification and really be looking for a full pre-approval.
Yeah, I want to know, even as the agent, I want to know that we are really ready to go do this thing, because we're going to commit a lot of time and energy to, going and looking at houses and the cost of doing that. And, so it's important to have that piece in order. So when somebody does a pre-approval, I know you mentioned it a second ago, a lot of times people have a little bit of fear about it. I think because they're afraid, it's going to hit my credit. I'm going to, this is going to make my credit go down. I don't want to hit that. I'm not really sure that that's the lender I want to go to, whatever.
Sure.
Their fears that they may have. How can you help make those fears go away, that this is a good normal part of the process, and this is what you have to do, really?
Yeah. We have a couple of different ways to mitigate that at my company. We do an actual pre-approval based on a soft inquiry on your credit. Mm-hmm. So a lot of lenders, I used to work at another lender who we won't mention their name, but a big lender that would never ever allow you to do a pre-approval based on a soft inquiry. We at CrossCountry do, and a lot of lenders are starting to do that. We were exclusive for a while, but it's really a neat thing because we can actually take and do a soft inquiry, get all the information we need off the credit, including the credit scores, run that through the systems. There are some automated systems we'll talk about a little later that Fannie Mae, Freddie Mac, and FHA and those use. And we really want to be able to run it through there to make sure that we're good to go. But we can do all of that with a soft inquiry. The client won't even see it pull up. It won't even show up. Like I have Credit Karma and some other credit monitoring services I'm employed. And it doesn't even show up on there because it's a soft inquiry.
Right.
Now, if we wanted to go full in, and part of what dictates that is timeliness. If we're getting a house tomorrow, like we need to go into contract immediately, we're going to do a hard inquiry right away.
Right.
If you're like, hey, I've got time, maybe I'm thinking of doing it in the fall and putting it off, then we can do the soft inquiry and be fine with it.
Okay.
But that soft inquiry is invaluable because you get to see everything. So sometimes there are things that the customer doesn't even know they have. Like I pulled their credit and I'm like, hey, did you know about this boat loan or did you know about this credit card? And they have no idea. And it's kind of scary that exists in this day and age even. So that's a big part of it is just being able to see back there and not necessarily hit them for the points. But let me just squash that for a second because people always say, it's going to hurt my credit.
Right.
When you do that hard inquiry, it's going to hurt my credit. That is true. You will lose some points. Let's just be honest. Mm-hmm. But I always equate it to like when you donate blood. You go and you give blood, and so your blood goes down, and then your body regenerates it and builds it back up. And it's very similar with credit. If you just, when you go, you will see your points come down, maybe 5-10 points on average. But that within a few short weeks, that's going to be right back where it was.
Bounces right back up, right.
And one other thing on that real quick is, so when you said, and maybe that's not the lender you want to go with, that's a very good point. Maybe, that's the first lender's not the best lender. Maybe you want to, shop around a little bit. That's fine. Just know that when you go, let's say you had a hard inquiry at the first lender, that opens a window in your credit world that allows you to go and have your credit pulled by the same type of lender. So in this case, mortgage. Several times and not have it affect your credit whatsoever. So your score will not, you'll take that first hit. So the first lender kind of gets the crappy part because they have to get the score is going to come down a little bit because of that hard inquiry. But then all the ones that come after that, it should not affect your score whatsoever as long as it's within that window. And there's a debate about whether that window is 30 days or 45. I'd say 30 days is more than ample time to shop around.
Just be safe. Yeah, for sure. Yeah, exactly. So before we move on to other topics or other things within this topic, what are some of the biggest mistakes that buyers make early on in the process that you have seen in your career?
Not telling us everything. I know, you don't know what you don't know till you know.
Yeah.
And I say that with a little tongue in cheek, but it's so serious. It's like, that just be honest with us. Like, we are here to help you, and we really genuinely are here to help you. Your goal is my goal, my goal is the realtor's goal. We all want to get you into your new home, your first home.
Right.
And I'm not trying to catch you in doing something or anything like that. Please be honest, and then that's going to help us to navigate that and be able to problem solve around that. Like, maybe there's some weird thing you did, and we need to just talk about it and fix it. Like, if it's not fixable, then how can we get around it in other ways? Or show some compensating factors of why it happened or whatever. But don't go buy expensive things right before you're going to go buy a house. Please don't do that. I see that so often. I mean, I just had a young man recently. Like a $900 truck payment.
Oh,
and this is like, he just got the truck like 2 months ago.
No.
I said, did you know you were going to buy a house? And he's like, well, we were thinking about it. I'm like, Lord, no.
Yeah, please don't do big things.
Don't do big things. Right?
Don't do big things at all during the whole process. Just don't do big things.
Just stay where you are until you're in your new house, and then you go truck shopping.
Whatever. Then you can do what you want to do.
They have different credit guidelines, by the way. So.
Yeah, very good. So, all right. So how do lenders come up with what someone can afford? How does that actually work on the backside?
So you have what I like to refer to as you have the guidelines, which is what we call them. But you have the guidelines, and then you have what you're comfortable with.
Right.
And I run my customers kind of through both. I say, okay, based on, because customers come to us in a couple different ways. One customer will be like, max me out. What is the max I can afford? What's the max I could get? What's the biggest loan you can get me? And that's kind of fun. I mean, that is something that worth looking at. But it's also more about what am I comfortable with each month making this payment? And that's where I really want to get them into. I want to dial them into that. It's not so much because people come to us with a sales price in mind. They go, oh, I think I'm going to buy a $350,000 house. Well, how did you arrive at that number? Let's talk about that, because when we really get down to it, that $350,000 house may be more house than you really want to pay for every month.
Right.
Or it may not be anywhere near as much as you thought. Like you might go, wow, that's all it costs. So maybe I can go to a $400,000. Whatever the case may be, I really want to get comfortableness in their head. Now, as far as guidelines, Fannie and Freddie, so you'll hear us refer to those, that's conventional financing. So you've got conventional, FHA, VA, USDA. Those are the main loan types out there.
Right.
Under conventional, you have two backers, Fannie Mae and Freddie Mac, or they are GSEs, they're government service enterprises, and they buy the vast majority. They do mortgage-backed securities on the vast majority of loans in America. Sorry, sidebar, forget all that. Only to say that with that, they have published guidelines, and so conventional loans guidelines say that you can't exceed 50% on your debt-to-income ratio. So, and we'll talk about that in a second. The debt-to-income ratio, FHA says, well, we're a little more liberal. You can go to a 56% if you've got really great credit or some other compensating factors. VA says, we'll let you go even higher than that. And VA, well, you can get into the 60s percentile with the debt-to-income ratio. And USDA dials it back down to 45, 50. But what is a DTI? What are we talking about when we say that? So
right.
We're really talking about your debts versus your monthly income. And it's as simple as a ratio as you take your gross income and you're going to put your monthly debts, each payment, not balances or anything like that, but just the monthly payments, you're going to put that above that and divide by your income. And that number that it comes out with, that is a critical number because that's the number that's going to determine your total DTI or debt-to-income ratio. And of course, in that number is the new house payment. So
right.
Say you've got a car payment, a student loan, a credit card, and now your new house payment. All of those go in, add them together, put that up there, divide by your income, and then that's going to come up with a ratio, and that ratio is your debt-to-income ratio.
Right. Okay. Yeah, that's helpful. So how much does it cost a buyer truly up front to get to get this process going?
So out-of-pocket expenses, that's another great question, because I just had one last month where we were literally waiting for the gentleman to get paid one more paycheck to get us to the finish line. That's how close we had gotten it.
Yeah.
Now, granted, he's about to get an amazing promotion at his job, and we felt comfortable in doing it. But yeah, it was right down to the wire there. People need to be what I would tell people is have a couple $1,000s set aside just because you're gonna have what you know very well inside and out is earnest money. That's like good faith money. As far as from your lender, the biggest thing you'll pay for up front is the appraisal.
Right.
The appraisal fee has to be paid for up front because we have to pay. We're invoiced that as soon as we hit the button and order your appraisal. That appraiser wants their money.
Invoice comes. Yeah.
Similarly, one thing that's been throwing people off is flood insurance. Flood insurance, oftentimes by the lender, is required to be paid before closing, and because we want to enforce at the day of closing. So depending on your agent and your lender, you may be required to pay that up front. So just be aware of that. If you buy a house in a flood zone, that's great, that's fine. But just be prepared that you will have to also pay for that flood insurance premium up front.
Right. Yeah. No, those are important things to remember because I think we do think we can just get in there and start this process for nothing. And it costs money to get through the process, but it's not just the mortgage on the other side. So can people buy, I get this question all the time, without putting 20% down?
Oh my goodness, yes. It's so funny, right?
It's still out there.
It permeates even to this day. I mean, we're in 2026 and I still have people that come to me with that same thought that it's a 20% down world. By no means has it been 20% down for many years now.
Right.
So we saw in the 1980s and 1990s credit expansion. And what I mean by that is, so conventional, we were talking about those earlier, Fannie and Freddie, they'll let you now put down as little as 3% if you're a first-time home buyer. Now, what defines a first-time home buyer?
Right.
That is someone who's not owned a primary residence in the last 3 years. So that's important to note. They have not owned a primary residence in the last 3 years. You could have owned a investment property that you inherited from your grandpa that you had for years. You would still be a first-time home buyer if you did not own a primary residence in the last 3 years. Right. So if you haven't owned a primary in the last 3 years, you met the qualifier for first-time home buyer for the federal government. So that will allow you, like I said, on a conventional, as little as 3% down. In FHA, you're going to put 3.5% down. If you're a veteran or a surviving spousal veteran, you put nothing down if you have your full entitlement. And USDA is nothing down. Is a 0% down also. So you've got two that are 0% down, VA and USDA, and then you've got the other two are 3 and 3.5% respectively. So you can really get into a house with very little if that's your goal. And FHA, people sleep on FHA, but FHA is a great product for a lot of folks.
It really is, especially for that first-time buyer. It can be a really great product. Yeah, absolutely.
And I wouldn't say it's your forever loan, but I think it's a great way to get people
to get started in the process. Yeah, absolutely. So, kind of following up on the cost of the process, but how important is credit score in the mortgage process?
It is important, and what I mean by that is it's not just if you're going to be approved or not approved. I mean, that's very binary, right?
Sure.
It's more about how much can you afford, what kind of rate are you going to get, and it sounds tacky and terrible to say, but it's true. The rate in large part is driven by your credit score.
Yeah.
There was a time, I mean, I've been doing this for quite a while. There was a time where the credit score wasn't as significant as an ingredient in the gumbo of your rate.
Right.
Now it is. That's really a critical piece in determining your interest rate. So get your credit up and keep it up right before you're going to buy a house, because you really want to. We want to give you the best rate, but we can only go off of what that credit score looks like. So,
and that's part of that getting with the lender in the beginning part, because there may be some things that people can do to increase that score in a rather short period of time, but they really need to know what is the right decision to make there, and not just pull the trigger and go closing a credit card or something that end up being a bad decision and delays them in the process.
And most lenders, us included, I mean, I'm really proud of what we do with it. And we have a way to do what's called a rapid rescore.
Yes.
Love that thing.
That is fantastic.
We have simulators. We have access to simulators that don't cost you anything, because it costs our customers nothing. We take on the expense of that to do that. And it can be in some cases where it's just you're trying to move from one credit band to another credit band to give someone a better rate. It may also be the difference between getting a loan and not getting a loan, and I've had that happen.
Yeah.
Where we do the simulators, and you can. And we just had one. I know I keep saying last month, but it was like last month. It was a great one. We had one just last month. This young man, I had never seen one, and I swear, 100 plus points on all three by doing two activities. He did two things, and his score went up 100 points on Equifax, Experian, and TransUnion. It was unbelievable.
That's crazy.
Yeah. I took it to my manager. We took it. We couldn't believe it. We were just like, "This is insane."
It's doable, though.
It's doable.
Yeah.
And I was shocked, because he's a rather young guy, but it's just really neat. And those are those things that, again, talking to your lender early is going to help you, because we want to help you. And if I identify something right away, a smoking gun on your credit that could be the difference between a 6.5% and a 7% interest rate, we're going to talk about it.
Yeah,
we're going to take a look at it.
Yeah, for sure. That's a huge difference in that monthly expense and over the life of the loan too. So
it doesn't cost you anything, and sometimes it doesn't make sense. I'll be honest.
Right.
There are times where we say, hey, you have to pay off this, and this to get a slightly better, an eighth better under rate.
Right.
We may not do that. It's got to be there's got to be a benefit.
Yeah, absolutely. Speaking of paying stuff off, should people pay off credit cards before they start the process?
That's such a hard answer, because it's really specific, because some people need every dollar, every dime they've got. So they think they're doing the right thing by going and eliminating debt, because that's what they've heard, that's what their grandparents told them or something.
Sure, yeah.
But that's not always the case, because then that might eat into their money that they needed for closing, or their reserves. I mean, some of these products require reserves. So you want to make sure that you have those reserves. And reserves are just monthly payments set aside after closing. So
sure,
if your payment's $1,000 a month, and we need 3 months reserves, you need $3,000 in the bank after we close. So.
Yeah, absolutely. So what are some good habits for people to get into that are thinking of buying a house, financial habits that they should get into?
Paid on time as agreed. Pay your payments on time as agreed. And some people, I think, get frustrated. I've seen it firsthand, where they might be late on something and they just let it keep going, and then it's a 30-day late and then a 60-day late. Yeah. Those cumulative lates are the worst. If you can avoid, you can be late. Let me back up. We don't want you to be late on anything.
Right, yeah.
In a perfect world, you wouldn't be late on anything.
Ever.
But if you are late, if something happens in your life and you are late, most, like, your mortgage is due on the 1st to the 15th, you're on time as agreed. Beyond the 15th, you would incur a late fee, and not until the 30th day of being late would you actually go on your credit. So that window of day 16 to day 30, you would incur a late fee with that lender, with your creditor, but it's still not going to show up in your credit report.
Right.
So take advantage of that. I mean, if you've got to be late, it stinks you got to be late, but don't be 30 days late.
Right.
So that's really critical, is never let it go 30 days late in the 12 months preceding your home buying.
Okay.
That would be a best thing.
Okay.
Try to keep your balances at a third on credit cards. You want to use about 33% of your credit card utilization. So when we talk about utilization, that's just how much you owe versus how much your limit is. $130 month to month if you can avoid it. So.
Right. So switching gears a little bit and just talking about we've gotten ready for the process to start. So now we're in the process. We've gotten our pre-approval. We're looking we've found a house. We're getting under contract. So what happens after we go under contract? What's going on behind the scenes?
Yeah, and I'll let you know all of that before you go into contract. You and your customer are contacting your lender to run numbers specific to that property.
Yes. Yeah, great point.
Because how many times have we seen where, the taxes are wicked high or the insurance is going to be really high, and then so that could really skew or change completely whether they want to make an offer. But let's say that we've done our homework, you sent us the information, and we checked it out, and we said, yep, Mr. Buyer, you're ready to go. And they make that offer, and now they're under contract. And so now it's like the rubber meets the road. Now, a good lender is going to be collecting documents all the way up to that, right? I'm trying to get documents for my customers as early in the process as possible so I can start my review of those documents. So for us, usually it's a refresh. By the time we get to a contract, we're like just updating some pay stubs, updating some bank statements. But we're going to get those items, and we're going to get them in, and we're going to get all your stuff packaged up and send it into a file to a processor and then onto an underwriter and so forth. So there are other players in the game, right? So from
talk about there's a lot of people happening behind the scenes.
So you've got me, your loan officer, and then you've got my processors. I've got 2 young ladies that assist me in helping me get the loans through the processing part of it. And then it goes to the underwriter. The underwriter is the all-knowing guru, is behind the curtain. But no, our underwriters are amazing at our company, and they really are. They want to do everything they can to help get the deal done. But they go in and they're basically like risk assessors. Their job is to go in and look at the whole picture and go, yeah, we think this person's going to do good, make their payments, and everything will be cool. Because we don't want to set you up to fail. That's the big thing. Is we're not out there being like, let's just do what we can and be shysters. Like, we're doing our best to not be that.
Right.
We want to make sure that everybody's on the same page and you can afford it. You go into it eyes wide open. So you got this underrated person who's going to be looking at all that stuff, and they find stuff that I try to do the best job I can up front at identifying things. Processor does her job at trying to identify things, but ultimately the underwriter can find things, and we can talk about that later. But then after it gets all the way through underwriting, and at the end we get what's called a clear to close, and we're doing the happy dance.
That's a good day. Yeah.
That's a good day. That's always a good day. Once we get that clear to close, your file then goes to a closer. So there's a person in my company who works just in the closing department, and their job is exclusively to reconcile that final closing disclosure, which is your final document for how much you need, and to send your documents over for the closing over to the title company. So they're a critical role as well. But there are other players. It's not just the loan officer and the real estate agent. There's within the lender's piece, there's several other players that work along with us, and we're all working together for one common goal. So
yeah, absolutely. So talking about the underwriters, why do they ask for so many documents throughout the process?
Well, so, and the only thing I can attribute it to is, we're not perfect as loan officers. We've got a lot that you're juggling when you're out there. You're trying to market. You're
Sure. Yeah.
Manage your old book of business and your past clients and keep them happy while you're going and finding new clients and talking to realtors and builders and running and doing and marketing and then you're actually doing the work and you're putting in the loans.
Yeah.
So there are times where we do our very best. I feel I try to do my very best, but I'll miss something. And so it could be a large deposit on a bank statement. It could be some unexplained weird thing that happened on their pay stub that I didn't catch. And those are the things that really start to snowball into the underwriter needs one more thing or the underwriter needs one more thing. And you hate to hear that, but it's true because sometimes, and hear me out, don't throw things at the radio.
No tomatoes.
Sometimes one document begets another document.
Sure.
And it happens.
Sure.
I've had, for an example, it's like we'll get a bank statement and there's this $10,000 large deposit. Now the average balance for these customers is $5,000 a month. So last month they have a $10,000 cash deposit. Like, what is that?
Where did that come from? Yeah.
Because you have to keep in mind that there are fraudsters, there are bad people out there that make it hard for us good people because they're doing fraudulent stuff, and so we have to be aware of that. Anti-money laundering and things like that. We don't want to be funding terrorism or some terrible thing.
Sure.
So we're doing our best to make sure that those things are in place, and that's where a lot of those guidelines come from. Is that we're trying to mitigate that risk, like you talked about.
Right.
So if we see this large deposit for $10,000, it doesn't match their normal banking behavior. We have to ask about it.
Right.
We ask about it, and they say, "Hey, yeah, my grandma gave me that money." Okay, cool. Easy enough. That's a gift. So we're going to go ahead and we're going to document how did grandmother give you that money. Oh, it's cash. That's not a fun. This is maybe not the best example because cash is not fun. Cash is hard to
track
quantify.
Down.
Yeah, you can't quantify cash. It's like maybe grandma did give him the money, but
right.
But let's just say that she gave him a check and he cashed it, and the same day went and got cash. and put it in the bank. That actually, we can make that work still, believe it or not.
Right.
But then grandma is hard to reach. We can't get her. She's not real tech savvy, so we have to like mail her gift letter, and so that we send it to her, and then she forgets to sign it or she forgets to date it, so we have to send it back to her. So it sometimes does feel like it just keeps going and going.
Yes,
like, oh my goodness.
Yes. When is this going to end?
But it's like one thing that became 10 things.
Right.
Oftentimes there's something like that. But just again, being really communicative with your lender up front.
Yeah.
And say, hey, I got this funky thing that happened, or hey, I did this, and you'll be able to mitigate a lot of that.
Well, and I think too, for so many people, I think the communication is a big thing, because it starts at the beginning and then goes through that whole process. You as a buyer, you've got to be communicating with all those parties that are involved. They're there to help you get to the closing table and to have that home. So communicating is just a huge part of the process. And as it says in our contracts, time is of the essence. So when you get asked something, let's try to get it back the same day so we can keep the process moving along, because you don't want to have to delay a closing and get caught in all that mess. So what are some common issues that do delay closing?
So when we find something out at the very end that we didn't know previously, and I know it seems like that's all we're harking on is the communication, but it's critical. And that's where we often see problems, is where something that we didn't know was going to happen happens. And that could be a large deposit, and identifying that. Mm-hmm. It could be a pay stub that we get at the last minute that doesn't match any of the other pay stubs. It could be a property issue. Like, we have sometimes where the appraisals, we'll try to do our very best to meet the timeline set forth by the realtor and stuff, but sometimes, I get these contracts and it's to close in 2 weeks or 2.5 weeks, and it's like, whoa. That's really very fast for everybody, especially for a lender. Yeah. Because we're having to contact an appraiser, see if they'll take the order and get your appraisal done quickly. Yeah. And they usually want a brush fee because they want to be compensated for that, right?
Sure, yeah.
And so we pay them for that, but sometimes those appraisals come in right before closing, and so there could be something on that appraisal that is like, whoa, wait, what about this? Or you didn't say it was on a private well. It is on a private well. Now we need a water test. Or whatever.
Changes the whole ball game.
So those type of things are what we see is the gotchas is just stuff that you try your best to mitigate up front, like I said, and there's certain areas of our county, like we know are on well. A lot of these areas are on well. So we go into a planning depending on the loan type. Are we going to need a well inspection? Are we going to need a water test? And those are things that you try your best, but you'll and the realtors get tricked too. And then in their defense, they'll think that it's one thing, like, it looks like it's definitely on city water. There's no well on the property, and then there is a well or something like that. So that's a big one that you can tell that's been a sticking point for me.
Those wells,
those darn wells. But yeah.
So we mentioned this a little bit before, but what are things buyers need to avoid before closing?
One is be around. I can't tell you how many people now. We all have life, and life is busy, and we have trips planned and things that come up, and maybe you bought those airline tickets to go see your grandparents 8 months ago, so you're not going to let those go. But do your best to be around and be accessible.
Be available.
I'm working with 2 clients right now that they are literally like driving in an RV across the United States.
Oh my gosh.
Which is super fun. Don't get me wrong. I'm jealous. I want to be doing it.
Yeah, me too.
But at the same time, getting documents from them is not easy.
Not an easy process.
Like,
that's not an easy process.
So, or even talking with them, because the gentleman won't speak to me while I'm on a cell phone. He only speaks to you on the landline. It's weird.
That slows down the whole thing.
Very much so.
Oh my gosh.
So just be available and be reasonable.
Be reasonable, yes, and get stuff to us quickly. So before we go, just a couple of other things. So what's advice you would give to someone buying their first home?
Don't be so afraid of it. Mm-hmm. Like, seriously, it's not a test, it's a process. Mm-hmm. And I like that advice. I read that somewhere, and it said, that it's not a test, it's really just a process. And it's a lot less scary than you might think. And know that you get comfortable with your lender. I feel like most of my clients, by the end of the process, Facebook friend request me. They really do.
Yeah, same here.
And you want it to be like that. You want to have a rapport with your clients that goes beyond just this transaction. And this transaction is a huge, really important thing. But it's process. It's not a test. So I don't want people to get caught up in, I'm going to try it and I'm going to fail and that's going to be the end of it.
Right.
I tell people all the time, like, if you're not a buyer today, and maybe you're not, you will be a buyer 3 months from now, 6 months from now, or a year from now. And our job is to help you create that roadmap to get you to where you want to go. And Again, it sounds cliche, but it's true. And I want you to know about all the things that make up your payment, from HOA dues to homeowners insurance to taxes and all that stuff. And all the way down to the things you might not have thought of for, when you go into the house, and your realtor probably better suited than I am, but be thinking of like window treatments and things that ceiling fans.
Yeah.
I mean, I built a new house a couple years ago, and it didn't come with ceiling fans. I
Yeah.
didn't think of that.
Yeah.
And I live in Florida. You got to have ceiling fans.
You got to have ceiling fans.
So we had to go out and spend a bunch of money on ceiling fans. So, I wish someone had mentioned that,
Right.
But they never did. But yeah, just make sure and you ask questions often and early, and there's no dumb question. We've all been there. I think most of us have had the fortunateness to buy a home, but when you do, it was stressful for us too.
Sure,
we were scared too.
Yeah, it is. It totally
then.
is. I remember, it's been 9 years now, but I remember going through that process of selling and buying at the same time in 2 different states.
Oh, goodness, yeah.
And having to get everything to close at the same time and coordinating all of that. And it's a very, even knowing how it works, it was still very stressful to keep everybody in line to get to the finish line.
I tell you what, you're so right, Nathan, because when we bought our last house, we just celebrated 6 years. I can't believe it's been 6 years already. It's just
wow, that's crazy.
By.
Yeah.
But I am a mortgage loan officer. This is my job. And I was still nervous and weird, and I was acting all weird about it. And it's like, why? I know this. Like, there's no, I can demystify it for others, but I can't do it for myself.
For yourself, yeah,
It was so odd, the behavior I was exhibiting. It was true. I was like sweating, and I couldn't sleep and stuff. And, but seriously, I think preparedness also creates confidence.
Sure.
So if people get in the habit of keeping your bank statements, keeping your pay stubs, or just knowing where to find them, that's another big one. Is talking to your lender early will help you identify those little mystery places where those exist.
Where those things exist.
Most people don't look.
Yeah.
If I say, hey, give me your pay stub for the last 30 days, they look at me like,
how do I get those? Yeah.
Because they know the money lands in their account, and they can go pay their
right.
bills, but they don't know what that document looks like.
Where it is and how to get it.
Where's your W-2s?
Yeah.
I threw them out. That's another one I've gotten a lot lately. Is I'm like, well, please tell me you went with some tax service we can get them from,
right? Exactly.
Block or something.
Yeah, seriously. But so what are your words of advice or things that I missed in my asking questions that you would say, I really want somebody to know this or understand this?
Don't rely on the internet for all your advice. I mean, seriously.
Thank you.
You can look at the internet, and now with AI, there's some really cool stuff you can do with the internet, but I don't think that should be your end-all, be-all. Because I get so many people that they're on the, I've done the mortgage calculator, Jason. I know what my payment's going to be. And I know what I can afford because I've done all the work. Even if you feel like you're really savvy on the computer, like I would encourage people to talk to a human and really engage with us and say, hey, and interview your lender. Yeah. And that sounds stupid, but hey, I went and got a dentist recently. Yeah. And I went through 3 dentists before I decided on the dentist I wanted.
Before you decide. Yeah, exactly.
It's a big thing,
It is a big thing, and you have to have with your realtor, with your lender, because you're going to be spending so much time with them. You've got to have that level of trust and confidence that that they know what they're doing, and that you can go to them with those questions. And like you said at the beginning, be honest with them about all the details, because they're just trying to help you through the process. And so, having that rapport is huge.
And I know we said it a million times on this podcast, but it's so true. The communication piece. Communicate through the process, before the process, all throughout. Because if you're thinking, oh, I've got this bit of money I've saved up for a rainy day, and I'm going to go drop it in the account. Just run that by your lender. Let us see, because it may not be a problem, but it may be a problem.
Right.
I'm thinking of. I just had a gentleman take paternity leave. I thought that was really progressive and cool.
Yeah, that's very cool.
So he took a paternity leave to be home with the baby, and I thought, oh, that's really cool. But I said, are you getting paid during this time?
Right.
And he goes, I don't know. I think so. And I thought, oh my goodness, how do you not know that? But in the same token, I was like, well, we need to know that because we're looking at your qualifying income, and what impact does this have on your income? Yeah. Sometimes they only pay you 60% of your 100% pay. Yeah. While you're on paternity leave, that would be critical to know. Yes.
Changes
so those type of things. It's just communicate. And we're going to be your bestie for the next 60 to 90 days. So the loan process takes about 30 days once you start it. I should mention that. But so just be prepared for like a month of hanging out with Jason. Yeah, exactly. And Nathan. But in the lead up to that, your pre-approval is good for 120 days. Mm-hmm. So that's another big thing is people go, oh, I don't want to get pre-approved till right before I buy.
Right.
you've got 120 days, you got 4 months, to work with.
Right.
So it's likely you'll be able to find your dream home in that time and close on it. So
exactly.
We're only pulling your credit once, and we're one and done there. But we are credit monitoring it the whole way through. So be aware of that. Don't open any new debts because your lender is looking at your credit the whole way through. That's not because we want to be peeping Toms. We have to do that because we want to make sure that we're not setting you up to fail.
To fail, right, exactly. Yeah, at the end of the day, we want everybody to be successful and be able to build that equity and that, that wealth that they can build in real estate. So, Jason, where can they find you?
I am all over the internet. I'm at jasonmccloy.net. That's JASONMCCLOY.net. That's my website. That gets you all the good information. My cell phone, day or night, and I mean this sincerely, 321-795-1417. And my office is in Suntree, across from the post office. If you're ever in beautiful Suntree, Florida, come by and say hi. But seriously, I try to be accessible as I can be. I know everyone works different schedules and different times. And
yeah, definitely. Well, thanks, Jason.
Thank you for having me.
Yeah, anytime. And again, I want to thank Jason McCloy for taking time out of his very busy schedule to talk about this important topic with us today. Again, it's a lot of ground to cover. We covered as much as we could in this format, but we'll have Jason back on again as we discuss even more things dealing with lending as we go into the future. Make sure you reach out to Jason for your lending needs. And again, for all your real estate needs here on the Space Coast, I would love to be able to assist you. So please reach out to me. My phone number is 321-603-9710. And thanks again for listening to #Let's Chat, and we'll see you in June. Have a great one, everybody.